Ever tried navigating the crypto world? It feels like you're just buried under jargon, right? And conflicting signals everywhere. Well, today we're doing a deep dive into one specific project that's really been making waves, especially now in July 2025. We're focusing on SUI. It's a layer 1 blockchain, basically, the fundamental base layer for dApps and its own token, SUI. Our mission today is simple. Take all the info we've gathered, tech specs, price charts, fundamental analysis, all of it, and pull out the really important stuff. We want you to walk away actually understanding what makes SUI tick, what the market thinks, and, well, why any of it matters.
Yeah, and just to set the stage a bit, SUI's whole goal is to be super scalable, really efficient, and also user-friendly for decentralized apps. It uses some genuinely innovative ideas to try and get around the limitations you see on, well, a lot of other platforms out there, aiming for next-level performance, really.
Okay, let's unpack that. We hear layer 1 speed, scalability thrown around a lot, but how does SUI actually do it? What's under the hood?
Right, what makes SUI? So what's really fascinating is its core design. Most blockchains, they process transactions one by one in a line. SUI doesn't. It uses this unique object-based infrastructure.
Object-based?
Yeah. Think of it like, instead of a single-lane road, SUI is more like a multi-lane highway. It lets many transactions run in parallel, side by side. As long as two transactions aren't trying to change the exact same piece of data or object, they can run simultaneously. That means, much faster confirmations and way higher throughput.
Ah, okay. Multi-lane highway versus a single file line. That makes sense.
Wait.
And this object thing is tied to their programming language, Move.
Precisely. The whole model is enabled by Move, their smart contract language, which, interestingly, was also developed by former engineers from Meta. Move lets developers define assets, how they're made, moved, updated as these independent programmable objects. It simplifies building complex apps quite a bit.
Okay, now here's where it gets really interesting for me, reading through the sources. The consensus mechanism. Something called Mysticeti. What's special there?
Mysticeti. Yeah, that's really the engine driving SUI's performance. It's built for both low latency, meaning speed, and high throughput. It allows multiple validators to propose blocks at the same time, using the network's full capacity. It also helps resist censorship. These are features you sometimes see in DAG-based protocols. But the key thing is its efficiency. It only needs 3 rounds of messages between validators to finalize a block. That's like the theoretical minimum possible, so it dramatically cuts down the waiting time for transactions.
And the numbers, the transaction speeds they're claiming, they seem almost unbelievable.
They are pretty striking. Theoretically, Mysticeti could handle more than twice the transactions with half the latency compared to, other top protocols. Tests have shown it hitting 300,000 transactions per second TPS with just 10 nodes before latency even crosses 1 second.
Wow.
And get this, 400,000 TPS with 50 nodes. On average, consensus takes about half a second, with a sustained throughput around 200,000 TPS.
Just for context, how does that compare to something like, say, Visa?
Right. Visa averages around, 1,700 TPS? Maybe a bit more peak. So SUI's theoretical capacity is just orders of magnitude higher. It suggests it could handle things like global payments, intense gaming interactions, huge data flows, almost instantly. And part of that efficiency comes from this novel implicit commitment rule. Basically, nodes can agree with fewer back and forth messages, less chatter, lower bandwidth use, and crucially, you get immediate finality. Once your transaction is in, it's in. No waiting for extra confirmations. Faster, more reliable, even if the network isn't super busy.
So yeah, technologically, they're definitely pushing the envelope, trying to redefine what a blockchain can actually do. But tech is only half the picture, right? The SUI token itself must play a big role. What does it actually do in the ecosystem?
Absolutely fundamental. The SUI coin has 4 main jobs. First, staking. You lock up SUI to help secure the network, run the proof of stake system, and you earn rewards. Second, it pays for gas fees, transaction costs, and also for data storage on the network. Third, it's designed to be a versatile asset within apps, like a unit of account, store of value, that sort of thing. And fourth, holding SUI gives you governance rights. You get to vote on protocol upgrades, have a say in SUI's future direction.
And speaking of the token, there's a fixed total supply, right? Not infinite.
Correct. The total supply is capped at 10 billion SUI. That finite number is meant to support long-term stability, not just, quick speculation. And this is important, not all 10 billion are circulating right now. There are these unlocking schedules.
Right, unlocks. Those can definitely make investors nervous.
Yeah.
The sources mentioned a pretty big recent one.
Yeah, exactly. On July 1st, 2025, just recently, 44 million SUI tokens were unlocked. That's worth around $77 million. This batch went to Series B investors, the Community Reserve, early contributors, and the Miston Labs treasury. Now, this unlock, plus another 117 million SUI that entered circulation not long before, well, it definitely raised some concerns about potential selling pressure. Right now, the circulating supply is about 3.45 billion SUI, roughly 34.5% of the total. So over half, 5.2 billion tokens are still locked up. That means future supply pressure is still something to watch.
I also found it interesting how they launched. A lot of projects do these big airdrops to create buzz, but SUI deliberately didn't. Why?
That's right. They were very public about no SUI airdrops for the mainnet launch. Their reasoning was pretty thought out. They wanted to reduce the risk of scams and bad actors latching on, avoid potential tax headaches for users in certain places, and fundamentally, they felt the long-term benefits of airdrops were minimal compared to just short-term hype. It signals a focus on, building something sustainable.
Okay, sustainability. Let's talk about that storage cost. How does SUI handle paying for data storage long-term? That trips up a lot of chains.
Yeah, it's a critical point. How do you make sure validators are paid to store old data forever? SUI has this really clever mechanism, the storage fund. When you store data on SUI, part of the fee you pay goes into this dedicated fund. The fund itself then stakes its capital within the SUI network and earns staking rewards, just like any other validator or staker. These rewards, not the original capital, are then distributed to the current validators to cover their ongoing storage costs.
So it pays out the interest, essentially, not the principal.
Exactly. Because it only distributes the returns, the fund itself can theoretically last forever, constantly generating income to pay for storage. It's designed to be perpetual. Plus, there's a deletion option. If you remove your data later, you can actually get a partial refund of your initial storage fee.
Yeah.
It's a really elegant solution to that long-term data cost problem, ensuring the chain can grow without becoming prohibitively expensive for validators down the line.
And that ties into this deflationary aspect people talk about. Usually deflation sounds bad in traditional economics, but here's good.
Right, exactly. In SUI's model, it's seen as a feature. As the network gets busier and more data is stored, the storage fund grows larger. More SUI gets locked into that fund, effectively removing it from active circulation. This increases scarcity, potentially boosts its value as a store of value, and encourages long-term holding.
And the validators doing all the work, how are they rewarded? Is it just random luck like some POS systems?
Nope. Another interesting twist here. SUI aims for predictability. All validators who behave honestly receive their staking rewards with certainty. The reward amount is based directly on how much SUI they have staked. No randomness involved. Unlike some traditional proof-of-stake models where block rewards can be a bit of a lottery, it provides a more stable incentive.
Okay, let's pivot to the market. That July 1st unlock obviously casts a shadow. What's the immediate price situation for SUI, and what are analysts watching?
Well, as of July 1st, 2025, SUI is hovering around $2.70. The unlock definitely brought caution. The price was already down about 15.5% over the last 30 days leading up to it. Analysts are warning, as they often do with big unlocks, about potential selling pressure if early investors decide to cash out. From a technical standpoint, the zone between $2.42 and $2.66 looks pretty critical for short-term support. If it breaks firmly below $2.42, the next stop could be down around $2.09. Shorter time frames like 1 hour, 4 hour charts show some mild bullish signs or consolidation, but the longer 12-hour trend, that's looking bearish right now.
Oof. Any other indicators flashing warning signs?
Yeah, another one is the decline in SUI's futures open interest, or OIY. It peaked back in May at over $2 billion, but now it's down to around $1.19 billion. A drop in OI often means less appetite from derivatives traders, which is usually, well, a bearish signal. The token's lost about 37% since its peak of $4.29 in May, so definitely some headwinds.
Sounds pretty gloomy short term. Are there any counterpoints? Reasons maybe not to panic, or signs the network is holding up okay?
Absolutely. It's rarely all one-sided. While that short-term pressure is real, some analysts urge caution against, assuming the worst. The ecosystem itself is growing fast. And crucially, the total value locked, TVL, the amount of money active in SUI's DeFi apps has remained fairly stable, near $2 billion. That suggests underlying activity is still strong.
Okay, that's a good sign.
Also, Miston Labs' CEO, Evan Chang, hasn't sounded any major alarms about the unlock, which implies some internal confidence in their plans. And importantly, we haven't seen concrete evidence of massive sell-offs from early investors yet. Some are even looking at $1.65 as a potential floor, a strong long-term support level if things dip further.
So mixing all that together, the tech, stack, the unlocks, the TVL. What are the prediction models actually forecasting for SUI, say, over the next few months and years?
Okay, short term, the models mostly lean bearish, agreeing with that technical analysis. They suggest a potential drop towards $2.01 by the end of July 2025. That'd be another 25% down from current levels.
Right, but longer term?
Longer term, the picture flips quite dramatically. The forecasts become much more bullish. For 2026, for instance, the average prediction is around $4.25, with some models suggesting a possible high of $7.32. Looking further out to 2029, the average could be near $4.99, with a potential high reaching $11.30. So the long-term view suggests a pretty strong upward trend, even potentially hitting $10 by late 2029. Of course, these models factor in historical trends, volatility, market cycles, even things like Bitcoin halvings.
So for someone trying to make sense of this, it's basically brace for potential short-term pain, but the long-term potential is still seen as significant, assuming the project delivers.
That's a good way to put it. Expect volatility now. But if the network keeps building, keeps attracting developers and apps, maybe lands some big institutional partnerships, then yeah, there's definitely room for substantial growth. Risk management is key, obviously. Analysts always stress things like limiting exposure short-term, using stop losses. It's about balancing that potential against the current market realities.
Okay, let's zoom out from price charts again. What's actually happening on the SUI network? What kinds of apps are people building? What does adoption look like?
This is where you see the why behind some of that long-term optimism. SUI is becoming a really popular platform, especially for DeFi, gaming, and NFTs. That speed, low latency, and immediate finality we talked about, that's what's attracting them. For example, there's been huge growth in Bitcoin-based assets on SUI. OKX, the big exchange, launched XBTC, a new kind of wrapped Bitcoin, and they chose SUI as one of the very first chains to support it. Bitcoin assets now make up over 10% of all the value locked in SUI's DeFi. That's significant.
10% already. Wow, that is a strong signal. What else in DeFi?
They're also moving into real-world assets, RWAs. There's a partnership with Open Market Group that lets users get involved with things like tokenized property. Users get these unique non-transferable soul-bound tokens. Think of them like a digital ID badge that grant access to these RWA investments and the rewards they generate. It's bridging traditional finance and DeFi.
Interesting. And gaming, always a hot topic for blockchains.
Yeah, definitely making moves there. There's a game called Society, for example. They partnered with Adidas, the sportswear giant, to release limited edition NFT sneaker skins. Players can actually use these skins in the game or trade them. It's a tangible example of NFTs being integrated directly into gameplay, not just sitting as collectibles.
Cool. And it's not just SUI itself, right? The sources mentioned a bunch of other projects popping up in the ecosystem.
Oh, yeah, absolutely. The ecosystem is really diverse. You've got wallets like Tangem adding SUI support. Then there are major protocols like CEDAS, that's a big decentralized exchange, over $220 million locked, nearly 2 million users. There's Deep, which provides an on-chain order book for better trading liquidity. And Silent SND, a lending protocol. And you even see the fun side of crypto. Meme coins like Sudang, HIPPO, and AXOL, even if they're just meme coins, their activity and user base show engagement on the network. Sudang actually has a cool angle, supporting wildlife conservation charities.
So it really is a whole ecosystem taking shape, leveraging SUI's specific features. Not just about the main token, but no platform is perfect. Every project faces hurdles. What are the big challenges SUI needs to overcome, and how are they tackling them?
Right. It's a super competitive space. They face tech hurdles, potential regulatory issues down the line, like everyone else. One key area often discussed is decentralization. Compared to, say, Ethereum with its vast number of validators, SUI's validator set is currently smaller.
Okay, so how are they addressing that? How do they encourage more people to run validators?
They're tackling it directly with things like SIP 39. That's a SUI improvement proposal being rolled out. Its main goal is to significantly lower the barrier to entry for new validators. Instead of needing a huge stack of SUI tokens, the requirement shifts to needing a minimum amount of voting power. So for example, with the current amount of SUI staked, someone might be able to become a validator with as little as 2.31 million SUI to meet the threshold. The idea is to make it much more accessible and encourage wider participation, strengthening decentralization over time.
And security. Any network handling billions needs top-notch security. The sources mentioned an incident, the CEDAS hack.
Yes, the CEDAS exchange hack definitely caused some jitters. That was a significant amount stolen initially, around $223 million. But SUI's response was actually quite impressive in terms of coordination. Validators and other projects in the ecosystem moved fast, freezing about $163 million of those stolen funds. A security firm quickly found the bug in Cetus's code and outlined fixes. While the hack itself was bad, the rapid response and the transparency about the fix arguably helped bolster confidence in the network's ability to handle crises. It showed they could coordinate effectively.
So it becomes a case study in resilience almost.
In a way, yes. It highlights just how critical robust security and fast, coordinated incident response are in this space. You learn from it and hopefully emerge stronger.
So putting it all together, the tech, the tokenomics, the market ups and downs, the ecosystem growth, the challenges they're addressing, what's the big picture, what's SUI's long-term vision?
They have a very clear ambition to be a premier platform for dApps, a go-to layer one. Their continued focus on development and transparency, even through market volatility or incidents like the hack or unlocks, seems to be building confidence. They're clearly attracting developers, projects, and even starting to get institutional interest. That's a positive sign. If they can keep that momentum going, keep the developers building, attract more high-quality dApps, maybe land more big partnerships, then yeah, the potential for growth is significant. They could really establish themselves as a major scalable layer one solution that people actually use.
Wow, okay. We've covered a lot of ground on SUI today. From the nuts and bolts of its object model and that super fast mysticistic consensus to the tokenomics, the unlocks, the storage fund, no airdrops and those wild price predictions. Plus, exploring that whole ecosystem from serious DeFi and RWAs to gaming and even meme coins like Sudang and its hippos.
Yeah, and importantly, how they're tackling the tough stuff. Decentralization with SIP39, security lessons from the Cetus incident, showing they're actively working on strengthening the network.
So, for you listening, trying to make sense of this fast-moving crypto space, what's the bottom line here?
Well, it looks like SUI definitely faces some short-term choppiness, mostly due to market sentiment around those token unlocks. That's pretty clear. But the underlying technology that focus on speed, scalability, instant finality, combined with a dedicated team and that growing ecosystem, it really positions SUI as a serious player for whatever comes next in blockchain. They're tackling fundamental bottlenecks.
So maybe the question to leave you with is this. How might SUI's really different way of handling transactions and its unique long-term economic plan actually reshape things? How could it change the kinds of dApps we see and maybe even how you interact with digital stuff down the road? Something to think about.